make no friends in the pits and you take no prisoners. 1 minute you're up $500,000 in soybeans and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The revolution starts now.
We have to pass the bill so that you can find out what is in it.
Turn those machines back on!
You are about to enter the Peter Schiff Show.
Show me the money!
If we lose freedom here, there's no place to escape to. This is the last stand on earth.
The Peter Schiff Show is on.
I don't know when they decided that they wanted to make a virtue out of selfishness.
Your money, your stories, your freedom. The Peter Schiff Show.
Today's podcast is sponsored by Indeed. Indeed knows hiring needs to be cost-effective when you're running your own business. Start hiring now with a $75 sponsored job credit to get your jobs more visibility at Indeed.com/Peter. Terms and conditions apply. Today's podcast is sponsored by Mint Mobile. Get your new customer offer and your new 3-month unlimited wireless plan for just $15 a month at mintmobile.com/gold. Additional taxes, fees, and restrictions apply. See Mint Mobile for details.
The Peter Schiff Show.
Well, as promised, I am interrupting my Thanksgiving week family vacation to do a podcast. If you're wondering where we are, I am on the island of St. Bart, which is just about an hour's prop plane ride from my home in Puerto Rico. You know, we like to come here. It's the easiest way to get to France because it's very French and very close to Puerto Rico. You know, next year, we'll be able to come here on our solar-powered catamaran. I mentioned that on a prior podcast. It's currently being built in Gdansk, Poland by a company called Sunreef. So looking forward to doing my podcasts from that solar-powered, eco-friendly catamaran. So that's about a year from now. But, you know, I want to start off today's podcast by talking again about Thanksgiving. Tomorrow, everybody is going to be celebrating Thanksgiving, having Thanksgiving dinner with friends and family. And I want to give everybody something to talk about other than trying to FOMO your relatives into buying Bitcoin at close to 100,000. Although we didn't quite hit 100,000 yet. We came ever so close. I think I saw 99,800, something like that. And then we pulled back to about 9,100 as I'm recording this. We're about, 91,000, excuse me. I'm off by a decimal point, but I mean, as I'm recording this, it's about 96,000. But I know a lot of people use the Thanksgiving holiday to try to brag about how much money they're making in Bitcoin and trying to, you know, get all their relatives to get in on it. But I'm going to give you something else to talk about. And I've mentioned the story of Thanksgiving before on podcasts, but it's a really good story. And any good story is worth telling over and over again. Especially since I probably tell it slightly differently each time because I don't actually have a script. But it's something that I would encourage everybody else to bring up at the dinner table as you know, part of the conversation. You know, kind of like if you're Jewish and you know the story of Passover that you say at a Seder, the Exodus and Moses and everybody leaving the Egyptians. I think it's kind of like that because it's kind of like a dinner. But a lot of people don't really know the history of Thanksgiving and the lesson that it tells. And it's a good one. So I'm going to tell it again because Thanksgiving really is a celebration of capitalism. That's what's going on. It was the celebration of a bountiful harvest that followed several years of basically starvation and scarcity at the early, you know, pilgrims where they first landed. You know, they all came across from England. You know, these were Puritans, you know, pretty religious group of people came across. They journeyed across the Atlantic Ocean to get to the Plymouth colony. The journey took over 2 months. Imagine being on a boat, you know, for 2 months, not like a pleasure yacht like we got now, but, you know, 1620 wooden ship. You know, coming across for a couple of months. Imagine the conditions that you would have to endure to make a journey like that. But anyway, about 100, a little over 100 people made it. And, you know, when they first got here, they were very idealistic. And so they decided that they were all going to work together in a communal effort to farm and grow food, right? They didn't want any one pilgrim to get rich. The whole idea was everybody would contribute to the best of their ability, and then everybody would have an equal ability to draw from the communal harvest, right? Everybody would just go out and farm and put whatever they grew into this communal pot, and everybody would just take what they needed. Now, remember, this was hundreds of years before Karl Marx came up with the idiotic concept from each according to his ability to each according to his need, right? That's the basic tenet of communism, right? Everybody just does what they can and then takes what they need, right? Nobody, is above anybody else. Well, he wasn't the originator of that. I mean, here you have, hundreds of years earlier, the Pilgrims tried an experiment that failed miserably in Marxism. You'd think maybe Karl Marx, if he knew anything about American history, might have realized that the whole premise of his book, Das Kapital and everything he did was already completely disproven by the Pilgrims. And of course, Bernie Sanders and AOC and everybody else who wants to, regurgitate this nonsense needs to spend a little time listening or studying history, because what happened was, so all the Pilgrims come in here and they're all going to work collectively for the good of everybody. And what happened was there was widespread famine and starvation, and half of them died. Like 50 of the 100 died during the first couple of years, mainly for lack of food. It wasn't, just the elements. And the problem was that people didn't want to work hard when they didn't benefit any more than the slackers. And of course, there was a big incentive to be a slacker, because why work hard when you're not going to get any extra food? Why spend your day toiling in the fields when you're going to get the same amount of food as the people who don't do any work at all? And so, a lot of the Pilgrims, they were just sick every day. I can't work. I don't feel good. My back hurts. So people would come up with one excuse after another not to work, because they knew that somebody else would do the work. And then again, it wasn't just the farming, it was the cooking. But, some of the women, they didn't want to cook, for the other family or, somebody else's husband. There was, so nobody did anything. And, for the people who think socialism could work, you're talking about a group of people, very homogeneous, that came here on a mission, very religious, right? Very devout. They were really committed to this success of this new colony. Yet when they were put in a situation of socialism or Marxism, when it was, hey, let's all just work for the benefit of society, it didn't even work. If socialism, right, didn't work, or Marxism, what do you want to call it, with the Pilgrims, how could it possibly work with any other group of people? This is a small group, right? All committed to the same goals, the same ideals, yet they nearly starved to death because nobody wanted to work when the benefit of their work was going to be shared equally by everybody. Everybody was greedy in that sense, right? And so the whole thing fell apart, and they almost starved to death. And what saved the colony is they finally decided, they learned from their mistakes, which is, that is rare, because modern day socialists never learned from their mistakes or anybody else's, right? Because if they had learned from the mistakes, they would have learned from the mistakes of the Pilgrims, right? So what happened was they finally decided, what, this ain't working. So let's divvy up all the land, and each Pilgrim, will have their own little parcel, right? Each, maybe a family, maybe it was a husband and wife, but each family unit got their own area to farm. So instead of having one big collective farm, everybody had their own. And the new rules were, you eat what you grow, and you could trade what you grow, right? What you grow belongs to you, and nobody else gets to share it. And the minute they did that, everybody went to work, right? right? All the people that were calling in sick, suddenly they weren't sick anymore. Everybody worked as hard as they could when they were able to benefit and enjoy the fruits of their own labor, right? And once people realized that they couldn't slack off and leech on somebody else, they realized that, you know what, if I don't farm, I starve. Everybody farmed. And so people had an incentive to work hard and be productive. And you know what? They were so productive. They had a bountiful harvest under capitalism. People were growing a lot of food. They were trading with each other. They started trading with the Indians, right? Because they had so much, right? In socialism, they had nothing. They had famine and starvation. But under capitalism, they became so productive that they had extra. They produced more food than they could consume. So they had a surplus that they could trade, and they started trading with the Native Americans. And eventually we had the first Thanksgiving feast. But the reality is it was nothing but famine when they were a Marxist society. And as great as that all sounds, like, hey, let's all work for a common goal. Human nature just doesn't work that way. No matter how great, socialism, Marxism may sound in theory. Yes, in this ideal world where everybody is just altruistic and we just all work for the common good, it'll be great, right? And in theory, sure, yeah, that sounds, wonderful, but in practice, it never works because humans don't operate that way, right? It doesn't matter what you want to conceive theoretically could happen. Human nature hasn't changed. It hasn't changed at all since 1620. I mean, in fact, it hasn't changed since long before then. Doesn't matter how much more technology we have today than we had then. Basic human desires and the way we're wired, the way we operate, that hasn't changed, right? And we're not going to work as hard for society as we will for ourselves. And people will always try to take advantage of the fact if they're going to be rewarded without having to work, they won't work. They'll make up excuses. You wake up one morning, you don't feel like going to work. You know what? I'm not going to work. Why should I? I'm not going to get any extra. Why? I don't feel good. I have a sore back. But when you're getting the reward, then you find the stamina to persevere and show up, and that's, the entrepreneur I've talked about, the unsung hero of the American economy. When people are building their own business, right, they will break their back. They will work 16-hour days. They will work 7 days a week. I know because I did that myself when I started my business. And I know a lot of other people who have done that. Nobody is going to do that if it's business. And if you're just working for the government, you're going to do as little work as you possibly can get away with. That is human nature. Those are incentives. And the Marxists never can come to terms with human nature and incentives and how they work. And the government still doesn't understand how they incentivize people not to work, not to be productive through the regulations and the programs that they pass. They always come up with these ideas that they conceive and they think they're going to help people, and they forget to understand how people are going to take advantage of everything that they do. That's how I knew that those PPP loans were going to be a complete disaster. You could say, sure, they were well-intentioned. We're just going to take care of people who really need help during the pandemic. Well, all of a sudden, a lot of people who didn't actually need help wanted it. They applied for it. They got it. And part of it was you felt like a sucker if you didn't take it because everybody else is going to take it. Your neighbor is taking it. So I might as well take it too. Otherwise, I'm just a patsy, right? And that's how a lot of the pilgrims felt. Why should I work? What's in it for me, right? Well, that capitalism solves that problem. What's in it for you? You get what you produce. You own what you produce. You decide. You can consume it. You could trade it. And if you don't work, you get nothing. And that is a motivator right? A lot of people, if they have the option, that's why, you have this universal basic income. People think, oh, they're going to work if they get universal basic income. No, they won't. They'll use that as an excuse not to work. Why should they? You want to make sure somebody works? Well, if you don't work, you don't eat, right? You don't have a place to live. So get off your ass and start working. And people will. People will respond to that motivation. Now, again, that doesn't mean that I'm heartless and I'm going to say, hey, if you can't work and you're just going to starve to death, that's what they have private charity for. But the benefit of private charity is now people will help people that they recognize are in circumstances where they can't help themselves. But if you see an able-bodied guy who's not even trying, and the guy can go out and work, why are you going to give that guy charity? All you're going to do is encourage his bad actions, right? But yeah, I mean, when you see somebody and their circumstances are such that you can understand that they need a little help, people will voluntarily help their fellow man. But that's not what government does, right? Government takes money by force and then perpetuates the idea of people not having to work. But all that can be boiled down to the Pilgrims and Thanksgiving. So I think it's a great story of capitalism to tell the real story of Thanksgiving and why there is a Thanksgiving. Because if the socialists had stuck to their original plan, there'd be no America. They all would have died. The rest of the 50 or whoever came, everybody would have perished, and there would be no the United States if we had followed the Marxist playbook hundreds of years before Karl Marx himself even came up with it. Anyway, that's it. I'll be back right after this commercial break. I'm going to talk about what's been going on during the week, so stick around. I'll be right back. We're driven by the search for better. But when it comes to hiring, the best way to search for a candidate isn't to search at all. Don't search, match with Indeed. If you need to hire, you need Indeed. Indeed is your matching and hiring platform with over 350 million global monthly visitors, according to Indeed data, and a matching engine that helps you find quality candidates fast. Ditch the busy work. Use Indeed for scheduling, screening, and messages so you can connect with candidates faster. And Indeed doesn't just help you hire faster. 93% of employers agreed. Indeed delivers the highest quality matches compared to other job sites, according to a recent Indeed survey. Leveraging over 140 million qualifications and preferences every day, Indeed's matching engine is constantly learning from your preferences. So the more you use Indeed, the better it gets. Join the 3.5 million businesses worldwide that use Indeed to hire great talent fast. What I love most about Indeed is how simple it makes the hiring process and allows you to do all your hiring in one place. Candidates you invite to apply are 3 times more likely to actually apply for your job than the candidates who see it in search alone, according to U.S. Indeed data. Indeed gets you one step closer to the hire by immediately matching you with quality candidates. And now listeners of my show can get a $75 sponsored job credit to get your jobs more visibility at Indeed.com/Peter. Just go to Indeed.com/Peter right now and support our show by saying you heard about Indeed on this podcast. That's Indeed.com/Peter. Terms and conditions apply. If you need to hire, then you need Indeed. Okay, well, the week got off to a bad start for the gold market, but maybe a good start for the global, not economy, but just for the people, because I think the catalyst for the about $100 sell-off in the price of gold on Monday was the ceasefire agreement between Israel and Lebanon. And that's good news. I mean, I'm happy to see that. We'll see where that goes. And gold reacted with a $100 drop. And, I think the drop was overdone, number one. I think part of it is still the euphoria regarding the Trump trade and the strengthening dollar, which I'm going to get to momentarily. But a lot of people still think that the reason that the price of gold was going up was because of these geopolitical risks out there and the fact that there's been a de-escalation of the tension in the Middle East, that's a negative for gold. But I don't think that that's the story of the gold rally. Gold didn't get near 2,800 because of what's going on in the Middle East. I mean, those events didn't hurt the price of gold, but I think the main reason gold's going up is a debt story, an inflation story, a de-dollarization story. And I don't think those threats have de-escalated at all. I mean, despite the fact that, people are talking about the change with the Trump administration, the fundamentals, big picture fundamentals, remain the same. All I think we're doing is rearranging the deck chairs on the Titanic, right? It's not going to stop the ship from sinking, but it may result in some people thinking that that's going to be the case. So meanwhile, gold fell off. It still managed to hold about $2,600. It's recovered some of those losses over the past 2 days, Tuesday and Wednesday. We're trading right now. This is Wednesday about 4:30 New York time. Gold's around $2,636 an ounce. So it's recovered maybe $20, $25 from that near $100 decline. Silver also got walloped on Monday, and it was down again today. Even though gold was up, silver was down. Silver is getting very close to that $30 support. It's right around $30.10 right now. I still think that that's going to hold the support. Doesn't mean it can't trade below it a bit, but I think that they will be buying those dips below $30. The other thing that's been weighing on the metals has been the strength of the dollar. The dollar has been strong. I think the euro might have even gotten below 104 briefly. 104 was about the low. I've seen it turn. I'm here at St. Bart's, everything is in euros and stuff is expensive enough as it is. So the euro being down a little bit has helped out, although I did notice that the euro was up almost 1% today. So we finally got a little bit of selling in the dollar today. So the dollar index is off of its highs. That hasn't really helped gold that much. Dollar index is now 106, just barely above 106. We got above 107, I think, on the dollar index. By the way, so I don't forget, the Dow Jones hit a new record high today, crossing 45,000 for the first time ever. It didn't hold that level. In fact, it actually closed down 138 points on the day. The Dow was the only index that made a new high today, and they all closed the day lower. But they've been moving up, on the optimism surrounding Trump. And part of the optimism surrounding the dollar has to do with tariffs. And in fact, during the week, Trump did come out and reiterate his commitment to tariffs, particularly on Mexico, Canada, and China. And that announcement really sparked a big drop in the Canadian dollar that day. I think the Canadian dollar is down over 1%. Mexican peso also got hammered even more than that. Everybody is focusing on the impact that tariffs will have on the nations that we're trading with. And they overlook the impact that tariffs are going to have on Americans. Because tariffs always hurt the most the nations that impose them. I put out a post on X that a trade war is lost by the nation that wages it. And that's what's going to happen. I mean, people just think that the tariffs are gonna help. Now, if the government needs to raise revenue, I mean, tariffs are not the worst way to do it. I mean, they're better than an income tax, but it's still a burden on society, right? It's not like the taxes don't have a cost, and tariffs are taxes. I mean, they almost sound like the same word, right? They both start with a T, but a tariff is a tax, and it's not a tax on China. It's not a tax on Canada. Canada doesn't pay taxes. I mean, Canada is just a sovereign nation, but Canada's not paying anything. The tariff is on American citizens who want to buy Canadian goods. It's on American citizens who want to buy Mexican goods, and so it is a burden on those Americans. If they want to buy these goods, it's now going to cost them more money, right? Now, yes, I get it that if we impose a tariff on Americans buying Canadian goods, Americans will buy fewer Canadian goods, right, on the margin. And yes, that will hurt a Canadian company that might otherwise have sold those goods to Americans. Now they have to find another customer, right? So maybe they sell them to Mexicans, or they sell them to Europeans, or they sell them to other Canadians. Now, yes, they might not get as much money as they would have got selling to Americans, because that's why they sold to Americans in the first place. But, they're still going to get something for their goods. Their goods are going to get consumed. They're not going to just shut down because Americans aren't buying. There are plenty of other people who will buy. And if there's no other people that want those particular goods, let's say, they were making something that, only Americans want. I mean, it's hard to find a product that might only appeal to America. But let's say they were making products and Americans were the only ones buying them. And now the tariffs makes them so expensive that Americans don't want them anymore. Well, yeah, that company might go out of business. And now those workers will have to work someplace else. That capital will be freed up to do something else. And, it'll be reorganized and used in a way that can produce goods that, that people actually want. The real harm is in the United States, because you have these American citizens who were buying these Canadian products because they obviously wanted them, they valued them, and now they can't afford them anymore, so they don't have them. Now, either they're going to buy an American product that's more expensive, or a product made in another country, if there's not tariffs there. But it's a loss for that American, because now something that he used to buy is more expensive, or he doesn't buy it at all. He has to do without it because he can't afford it anymore. So there is a real cost here. But what I wanted to talk about at the moment is the idea that these tariffs are good for the dollar, because that's really what's been driving the dollar. I mean, not so much that the economy is going to be stronger under Trump than it was going to be under Biden, although that may be part of it. But most of what I read to explain the dollar's strength comes from the tariffs. And so there are two arguments as to why people believe tariffs are good for the dollar. So one is that they're going to reduce the trade deficit, right? By making imports less expensive or more expensive, Americans will import fewer goods, and more domestic goods will be consumed instead. And so we're going to run a lower trade deficit as a result of the tariffs, and that will put fewer dollars into global circulation, and a lower trade deficit should be beneficial for the dollar. Right? A big trade deficit should hurt the dollar. A smaller trade deficit should help the dollar. So the first part is the impact on our trade deficits, or balance of trade. The second argument that I read about why tariffs are going to be good for the dollar is that they're inflationary, right? Because tariffs will raise prices, and the Fed is going to respond to those tariffs by not cutting as many times as the markets had expected, or maybe even not cutting at all, or heaven forbid, maybe they hike, right, because of the inflationary impact of the tariffs. And so the tariffs are going to lead to a tighter Fed than would otherwise have been the case without the tariffs had Kamala won. And so it's that tighter monetary policy that is going to help the dollar. And also, I guess, on the impact of the tariffs, if people think that the tariffs hurt the countries that we trade with and not America. I mean, I hear that all the time, that, oh, America, we're the most important market, like Canada, most of Canada's exports go to America. And so they're really going to suffer from these tariffs. And the idea is that the global economy is going to suffer because it can't export as much to America. And therefore, the rest of the world is going to have a weaker economy as a result of our tariffs. And we're going to have a stronger economy, right? All three of these things, that the tariffs will reduce the trade deficit, strengthen our economy, and weaken the global economy, and lead to a tighter Fed. They're all three wrong, right? The markets are wrong. They're 0 for 3 on their economic reasoning. But that doesn't matter, because if that's what the traders think, if that is the conventional wisdom, then that's what's driving the movement in the exchange rates right now. So it's not that tariffs are actually going to help the dollar go up. what's helping the dollar go up is the belief that tariffs are going to be good for the dollar, because we don't even have the new tariffs yet. We got the old tariffs, and I'm going to talk about that. But the markets are completely wrong in their view. And so what that means is at some point, maybe once the tariffs are enacted and the expected effect does not materialize, there will be a substantial reversal in the dollar's fortune. And all the traders who bought the dollar on the expectation that tariffs would be good for the dollar will end up selling dollars when they realize it's the reverse, that they actually harm the dollar. And I'm going to speak about why that is the case on the other side of this final commercial break. So stick around. I'll be right back.
I love a great deal as much as the next guy, but it has to be easy. No hoops, no BS. So when Mint Mobile said it was easy to get wireless for $15 a month with the purchase of a 3-month plan, I called them on it. Turns out it really is that easy to get wireless for $15 a month. It's time to switch to Mint Mobile today and enjoy unlimited talk, text, and data for just $15 a month. In fact, when it was time to get my son Preston his own phone, Mint Mobile was the perfect choice. Forget about the steep monthly fees and overages that you get with your current wireless plan and make the switch to Mint Mobile's premium wireless plans, starting at just $15 a month. Choose any Mint Mobile plan, which includes high-speed data with unlimited talk and text on the nation's largest 5G network. You can even keep your current phone and number when you switch and bring over all your existing contracts. Ditch overpriced wireless with Mint Mobile's limited time deal and get 3 months of premium wireless service for $15 a month. To get this new customer offer and your new 3-month unlimited wireless plan for just $15 a month, go to mintmobile.com/gold. That's mintmobile.com/gold. Cut your wireless bill to $15 a month at mintmobile.com/gold. $45 upfront payment required, equivalent to $15 a month. New customers on the first 3-month plan only. Speed slower above 40 gigabytes on unlimited plans. Additional taxes, fees, and restrictions apply. See Mint Mobile for details.
All right, so I'm about to debunk the idea that tariffs are going to result in a stronger dollar. So first of all, let me talk about the idea that the tariffs are going to shrink the trade deficit. Well, we already have an example from recent history where that did not happen. Excuse me. I just somebody called my computer and it threw me off. Hopefully they don't. Oh no, they're calling again. Hey, hopefully they don't keep calling me. Anyway, what was I saying? Yeah, we have an example from recent history when Donald Trump enacted tariffs during his first term, and in fact, most of the tariffs are still there, right? So he imposed, I think, a 25% tariff, something like that, on China, on Chinese imports. Those China tariffs are still in effect today. They're still there. There was also tariffs on lumber coming in from Canada. Those tariffs are still there. Biden never got rid of them. Also, there was tariffs on products coming in, I think, from Mexico. There was tariffs in general on steel and aluminum coming from anywhere. All those tariffs are still there. So the tariffs that Donald Trump enacted are still there. So to the extent that we get additional tariffs, they're just more of what we already have, right? Now, we happen to get the merchandise trade deficit came out today for the month of October. Now, remember, the month of September was horrific. It was $108.2 billion. That was the worst trade deficit in 1 month ever, with one exception, which was the first month after we opened the economy from COVID, which, you had all this pent up stuff that was sitting on the docks that couldn't be shipped because there was nobody working. And so that was an aberration. So in reality, it was the worst trade deficit we've ever had last month. Well, the one we just got, oh, by the way, they revised that one up. It actually was even worse than they told us. It went up to 108.7 billion. But the October deficit came in quite a bit lower at 99.1 billion. Now, it's still huge. It's just slightly less huge than September. But it got there based on a big drop in imports and exports. Imports were down 5.4%. Exports were down 3.2%. That is a sign of a weakening economy. We're doing a lot less trading. We're exporting less. We're importing less. So a lot less economic activity. So this is just more confirmation that the U.S. economy is weak. And I'll get back to that in a minute, but I want to stay focused on the trade deficit. So this trade deficit that we just got in October of 2024 is just over 50% greater than the last monthly trade deficit before Trump took office. So if you look at December 2016, that trade deficit compared to the one we just got in October 2024, even though those tariffs are there, the trade deficit is 50% larger, merchandise trade, 50% larger now than it was before the tariffs were enacted. So if tariffs were going to reduce our trade deficit, why haven't they already worked? Why didn't the first round of tariffs reduce our trade deficit? And if the first round of tariffs didn't reduce our trade deficit, why would another round of tariffs succeed where the prior round failed? The reality is they won't. What's ultimately going to happen is we're just going to continue to run these deficits. It's just going to cost Americans more money to buy imported goods. And yes, we may buy fewer imported goods, but it's not going to turn around the overall deterioration in our balance of trade. When you look at what's been happening to the American manufacturing industry, and the weak manufacturing data continued today and this week, and as our manufacturing sector continues to be hollowed out, we become more and more dependent on imports. And all that means is that tariffs just increase the cost of those imports. They don't change the underlying trend. There is a lot that is going to need to be done to really reverse that. And again, what Trump is promising isn't going to do the job. Because I know that the problems that underlie the trade deficit are structural in the U.S. economy. And so they require a major realignment of spending and savings, investment, consumption. A lot has to change. And that's not going to happen without a severe recession. There's just no way to do it. But Trump did not get elected promising short-term pain for long-term gain. He promised immediate gain. And there's no way to deliver that unless you just blow more air into the bubble and hope it doesn't pop until you're out of office. So I think that's all that the Trump administration is going to attempt to accomplish. They're going to try to blow air into the bubble with tax cuts. But I don't think it's going to work in actually generating real economic growth. And if anything, it's probably going to put more upward pressure on the trade deficits. But the other argument that I would make regarding the trade deficit, let's assume that the tariffs actually did reduce the trade deficit, which they won't do, but let's just say for the sake of argument that they're right. The tariffs are going to make foreign goods so expensive that we just stop importing, right? And our imports go down. Of course, that happens. We're probably going to have a recession because if people aren't importing, they're not spending. Because again, there's not a domestic alternative for most of the stuff we're buying. But let's just say the trade deficit goes down. Why would that necessarily help the dollar? Because the trade deficit's going way up didn't hurt the dollar. I mean, this is something I was pointing out month after month after month. We would get these horrific trade deficits, much worse than expected, and zero reaction in the foreign exchange market. The dollar never suffered as a result of bigger than expected trade deficits. So why should it benefit if those trade deficits that didn't even matter, became somewhat less huge, right? If they got a little smaller, why should the dollar, benefit from that when it never suffered in the first place from, the much bigger deficits? The markets don't even seem to pay attention. Nobody cares about the trade deficits. I pointed this out. The market should care. The fact that these trade deficits are so huge, the dollar should be a lot lower. In fact, if the dollar had gone a lot lower, the trade deficits would have gone away or been reduced, because that in and of itself would have made imports more expensive. If the dollar really tanked, that would have made imports more expensive, and so it would have shrunk the deficit. That's normally how the free market would rein in excesses. If a country was running big deficits, the market would punish its currency, and the people would no longer be able to afford to run the deficits because they couldn't pay the higher prices for the imports. But America has been basically spared the consequence of market discipline by virtue of the dollar's reserve currency status. So we've been able to run these huge trade deficits without a weaker dollar. So why should smaller trade deficits help the dollar? It's not going to, because the trade deficits have been completely ignored for years and years. The last time they counted was in the 80s. I haven't seen the markets react to a trade deficit since the 1980s. So that's number one. Number two, the idea that they're inflationary, and so the Fed is going to be tighter. They're actually not in and of themselves inflationary. Yes, tariffs will result in higher prices, but it's a one-off event. Let's say that the tariffs are 20% across the board, and they result in a 20% price increase across the board. Let's say it was 1-for-1. I mean, it may not be exactly that amount. I mean, but whatever. Let's just, for the sake of argument, 20% tariffs, everything gets 20% more expensive. Well, that's it. It doesn't go up 20% every year. It's 20% one year, and now it goes up whatever price it would have gone up. It's just a one-time adjustment to make up for the tariffs. As long as the tariffs don't go up from 20% to 25% or 30%, so long as they stay at 20%, then inflation could go back to 2 or 3% a year in theory, because you're just building on those higher prices. So the Fed is going to look through any impact that tariffs have on prices when it comes to inflation, because what the Fed is concerned about is the annual rate of inflation going forward. The Fed will look through a one-time upward shift in prices that results from the tariff. They're not going to say, oh my God, prices were up 20% this year. We need to jack up interest rates because they're going to be up 20% every year. No, I mean, only if the tariffs go from 20% to 40%, then from 40% to 60%, which isn't going to happen. So it's not higher inflation. It's going to be higher prices, but that's not higher inflation. Now, how will Americans respond, right? Overall price structure. If Americans have to pay higher prices for the imports and they keep importing, well, then they're going to buy less of something else, and the price of something else is going to go down. And so overall price level may not be affected at all by the tariffs. Now, to the extent that tariffs make America less competitive, less productive, then it could have an effect. But to the extent that, we actually replaced income taxes with tariffs the right way, if we cut the marginal rate of tax, which is not really what Trump is talking about, but there are some pro-growth tax cuts that we could make and offset the revenue with the tariffs that might result in an overall more productive economy and that may keep prices lower. But that's not what people are arguing. They're saying that the mere fact that tariffs are being imposed and that they result in higher prices means the Fed's going to get tighter. I don't think so at all. In fact, they more likely will result in an easier Fed, because let's say consumer prices really go up because of the tariffs, and the result is a recession. Because if the economy is 70+% consumer spending, and we're going to be in a recession anyway, but let's say the tariffs help bring on the recession, the official recession, even sooner because of the net reduction in spending that results from the tariffs, the Fed might end up cutting rates. The Fed could end up being easier because of the tariffs than they might otherwise have been in the absence of tariffs. So again, the markets have it wrong to think that the tariffs are going to mean tighter money, when the more likely result is easier money to offset the damage done by the tariffs, which also gets me to the third point about these tariffs, which is that they're going to harm the global economy and they're going to help the U.S. economy. Look, if that was true, right? If all you had to do is impose tariffs on other countries, right? If that was the secret sauce to economic success, let me just slap on tariffs. Well, then everybody would do that, right? If it worked, if you could make yourself richer by putting tariffs, then you just put on tariffs, right? Everybody would do it. The reason that you don't do it is because it doesn't work. Free trade works. And in fact, even these politicians, when they say, oh, like Mexico and China are saying, well, if you put these tariffs on us, we're going to put these tariffs on you. That's not the right response. Again, it's like if you jump off a bridge, well, I'm going to jump off too. Look, the best thing you could do if a country wants to impose tariffs on its citizens, you don't respond by imposing similar tariffs on your own citizens, right? But I mean, there, you have economic ignorance, on both sides of the border. The best thing to do if a country wants to be dumb enough to try to limit the ability of its own citizens to trade freely, you don't want to do the same thing to your citizens. Let your own citizens trade freely, and you're going to win. That's how you win a trade war. You don't fight it, right? It reminds me of that old movie with the nuclear war. I even forget the name of it, from the 1980s. And at the end, it's like the only way to win the war is not to fight it, right? I mean, that's how you win the trade war. You don't fight it. Let the other guy shoot themselves in the foot and do nothing. But most likely there will be some retaliation because the politicians are always under pressure. Oh, I got to do something. I got to react. I got to respond, right? And so, it's better if they, took a Hippocratic oath like a doctor to do no harm and just didn't do anything. Because, right now, and I've been talking about this, the world, we're screwing the world over. I mean, I hear all these people say, oh, we have all the cards, right? Because we're the biggest importer. We have this huge $1 trillion a year trade deficit. So, we can really harm the rest of the world by making it harder for them to sell us their stuff. They're not really selling us their stuff. That's the point. They're giving us $1 trillion a year of their stuff for basically nothing. We're just printing money and giving it to them, right? We're the ones who have the most to lose from a trade war because we're the ones that are the most dependent on the production of the rest of the world. Again, the rest of the world is perfectly capable of consuming what they produce. They don't need to allow Americans to consume that stuff. What Americans are not capable of doing is producing this stuff ourselves because we don't have the factories. We don't have the supply chains. We don't have the trained labor force. We can't do it. Now, that doesn't mean we couldn't do it eventually. Sure, we could, get rid of enough government spending and regulations. And yeah, we're industrious people. We can retool and rebuild our industrial base, but not overnight. It's going to take time. So right now, we got to ride on the global gravy train, right? And we're the ones that are threatening to jump off. My point is if we do, it's actually good for the rest of the world. That the less of their resources they squander producing goods for a country that can't afford to pay for it. We can't afford to pay for our imports with exports. That's what the world needs. Look, the whole concept of comparative advantage is you produce what you're good at, and you trade with other nations who are producing what they're good at. And so instead of producing everything, you just produce what you're good at, and then you trade your surplus with other people who produced what they were good at. And now everybody gains. Everybody has more stuff because everybody specialized in what they do the best and then traded with one another rather than trying to be a jack of all trades. But the whole point of exporting is to pay for your imports. It's not just exporting for the sake of exporting. It's to get imports. Well, countries are exporting to America not to get imports, but to get dollars. Why do they want dollars? They're paid pieces of paper. Well, because that's the reserve currency. That's our gain. That's their loss. It's like thinking that people have jobs because they like to work. No, they have jobs because they like the money that they earn. If they could get the money without the work, they'd stay home and collect a check. We saw that during COVID. But most people realize that they want the paycheck, they got to show up, right? And so the job is a means to an end. Just like exporting, it's a means to an end. You export to import. So it's nonsense that we're going to harm the rest of the world with our tariffs. We're going to harm ourselves. And so all this is going to weaken the U.S. economy, and it's going to lead to a lower dollar, not a stronger dollar. Now, I want to look at some of the economic data, too, that came out. Again, more validation of what I've been saying, and again, and what the voters know. right? Which is why Donald Trump was elected president. So the Dallas Fed manufacturing survey that came out, this is the November number. The prior month was revised to minus 3.9. The current month is minus 2.7. The production index collapsed from actually a positive number, 14.6 in October, to minus 0.9 in November. Again, if we don't produce it, we can't consume it. And if we don't produce it and we want to consume it, we got to import it. And that's what we're doing. And that's why we have this huge trade deficit. Look at new home sales, absolutely collapsed in October. Rising mortgage rates back above 7%, probably a big factor in new home sales crashing from 738,000 in September to 610,000. They were looking for 725,000. The whole range of expectations was 710 to 750. We were 100,000 below the low end. That's one of the weakest new home sales reports we've had in some time. And they're going to get even weaker as more upward pressure comes on interest rates. Look at mortgage rates. Look at the Richmond Fed Manufacturing Index. Again, in September, minus 14, was supposed to improve to minus 8, still a minus number. Nope, no improvement at all. Another minus 14 in November. These are very weak numbers. All these negative numbers are manufacturing recession. Again, that's why we have these record merchandise trade deficits. And if the tariffs were going to work, if they were going to make American manufacturing more competitive, why haven't they worked? Why are we in a manufacturing recession? Is it because the tariffs aren't high enough? Is that the reason? Right? Is it just that Trump didn't go far enough and we just need more tariffs and that'll do the trick? Of course not. That is not the reason. Durable goods for October, also a weak number. Was supposed to be up 0.5, only up 0.2, although we did make the prior number not as bad as it was. It was a negative 0.8. Now it's a negative 0.4. So an improvement, but still ex-transportation was only up 0.1. That was a big drop from the 0.4 in September. But core capital goods, that was really disappointing. It was last month, it was up 0.5. That was revised to up just 0.3. And in the month of October, core capital goods actually declined. It was minus 0.2. Another weak data point. You know, I mentioned on the last podcast the big downward revisions to the jobs numbers. Well, this week we got a big downward revision to the personal savings rate. I forget the exact number, maybe 150 billion or so of phantom savings disappeared. That was buried in the personal income and consumption numbers. You know, I talked about that all of a sudden the government found these savings that, somehow they missed all. And all of a sudden, aha, here's all the savings that we didn't know were there. And the savings rate just popped up, out of the blue one month. Well, now most of that, it turns out, is gone, right? And it never made sense to me. I thought it was just election year puffery to try to make the economy look better by inventing phantom savings and claiming that the consumer is in good shape. The consumer knew they weren't in good shape. That's why they voted for Donald Trump. They had record high debt, paying record high interest rates on that debt, working 2 or 3 jobs. That extra number was bogus. And I'm sure more downward revisions are going to come. But the personal income number was up 0.6. One of the first times we've seen income rising more than expenditures in a while, because spending was up 0.4. So the savings rate did inch up from a big downwardly revised number. But also, if you look at the inflation numbers in here, right, the Fed is still claiming that we're on track to be at 2% inflation. Well, the core, year-over-year core, moved up from 2.7 to 2.8. That's the wrong direction, right? It's the core number that the Fed claims it wants to get down to 2%. It's heading back to 3. It's going in the wrong direction. And again, the month-over-month core was up 0.3, which was the same it was up in the prior month. So there is no indication at all that these numbers are headed down towards 2%. None whatsoever. Now, that also is probably something that weighed a bit on gold and helped the dollar because, again, people look at this and think, the Fed is going to have to be more aggressive to get, because inflation is not coming down. That's not what it tells me. It just tells me that the Fed has already lost the war against inflation. And the next war it's going to fight and lose is the war to prop up the economy, because we're going to be officially in recession probably in the first half of next year. I mean, I think we've been in recession for all of this year and probably a good chunk of last year. It's just that the government hasn't acknowledged it. And one of the reasons was, they were trying to make Biden look good and make Kamala look good. Well, I don't know that they're going to be doing the same thing for Trump, try to make him look good. So we might get a real glimpse of the economy early in Trump. And again, they're going to try to blame it on Trump. They'll claim everything was great. And then as soon as he got elected, all hell broke loose. And that's why things collapsed. Look at the Chicago. I'm just going over some of these numbers that came out already this week. We've only had 3 days in the week, and we've had all this week economic data. Chicago PMI was 41.6 in September, which is a very weak number, 41.6, right? Below 50 is contraction. They were looking for an improvement to 44.2. Instead, it went down to 40.2. Lower. And look at the consensus range. There was all this optimism, although not looking for a good number, but looking for an improvement. The consensus was from 43 on the low end to 47.5 on the high end. And we were at 40.2, nearly 3 points below the lowest end of the consensus range. And the final report that we got today that I'm going to mention is the GDP. That was basically unrevised. This is the Q3 preliminary, or not, I guess it wasn't even, this is the first look. They were looking for 2.8%, and we got 2.8%, although the personal consumption number was a little bit light. It was looking for 3.7, and we got 3.5. But again, I don't think these numbers are real. I don't think the GDP is rising by 2.8%. I think the main reason that you're seeing the growth in the GDP is because the deflator is too low, that we're not getting an accurate picture on just how much prices are rising because we're not accounting for it correctly. And so as a result of making inflation look lower than it really is, we make growth look higher than it really is. So the government gets 2 for 1, right? They kill 2 birds with 1 stone by lying about inflation. Because not only do they get to claim that inflation is low or lower than it is, but they also get to claim that growth is higher than it is, and they take credit for that. Anyway, that's it for today's podcast. I will be back. I'm planning on doing one more podcast when my vacation ends. We are headed back to Puerto Rico on Saturday, and so my plan is to do another podcast on Saturday. I don't want to wait till Sunday because a lot of people might be watching football. I know some people watch college football on Saturday, but I watch more pro than college personally. So I'll probably do another podcast on Saturday back in my studio in Connecticut. For now, everybody, if you like the podcast, don't forget to like it, leave a comment. Don't forget to sign up for my free newsletter at shiftsovereign.com. Wow, we got this pullback in gold and silver. I think it's a great opportunity. You can give thanks for the $100 sell-off in gold if you want to buy some more. The fact that silver is back now down near $30 an ounce, and before the market opens again, I guess on Friday, because we got a U.S. market holiday tomorrow. But the gold doesn't really take a holiday. You can go and buy some gold and silver at Shift Gold. And also, don't forget, take advantage of dollar strength. Go to europac.com and reach out and talk to my team of advisors at the Euro Pacific Asset Management to try to take advantage of what's happening to better position yourself for what I'm sure is coming and what the conventional wisdom still remains blind to. Anyway, that's it. Have a great Thanksgiving a day tomorrow. And remember to tell the story of capitalism, because Thanksgiving really is all about capitalism, and not just how capitalism works, but how socialism fails. Take care, everybody.